Steve, does the war upset Trump's plans for affordability?
Not so much so far, Stuart. I mean, I am kind of shocked at the fact that the oil price has not risen very much in response to the weekend's events. When you see $71 a barrel, you know, some people were predicting $90, $100 a barrel. So it shows that we have a world that's really awash in oil right now. Incidentally, if you go back a few months ago, a lot of the rigs here in the United States were shutting down because they couldn't make money at $50 a barrel oil. And so I think you'll see a resurgence of the U.S. Oil market as a result of the disruptions in the Middle East. So I would say I'm quite relieved today about the fact that the market's only down, I think, what, 1% over the weekend. That's not a very big response. So it looks to me like investors are pretty calm about what's happening in the Middle East.
I've been saying today that I would not be surprised if the market didn't rebound by the end of the week. Because in the past, you know, once the shooting starts, the market tends to go up. Am I out on a limb with this one, Steve?
I'm not going to make predictions about that because there's so many uncertainties about what's going to happen next in Iran and Saudi Arabia and that whole area of the Middle East. I think you're going to start to see maybe some of those rigs that were shut down in the United States, now that the price is up to $70 a barrel, maybe they'll start operations again. By the way, thank goodness we have a president who's drill, baby, drill, because that has made us much less reliant on the oil from Saudi Arabia and the Middle East. And so thank goodness we have that. Natural gas, by the way, I haven't looked at what's happened to the natural gas price. I think that's risen as well, but that's becoming increasingly important for our electric power production.
Last one, the Fed and rate cuts. With a war in progress, is a rate cut more likely?
You know, that's a tough one. I would say that I don't think that the Fed will necessarily respond to this, given the fact that, as we've just been talking about, the market response to what's happened in the Middle East right now has been pretty calm. And so I think the Fed will kind of stay on course. It's really important that we have a stable dollar and we retain the dollar's position as the world reserve currency. If this thing gets over quickly and we see a fast resolution to this, I think you're going to see a spurt of economic growth and rising values of American companies.
Steve, I'm out there saying it's the right thing to do and the right time to do it. Are you with me on this?
I hope so. Let's see how this turns out. But look, this is getting rid of these tyrants. I mean, look, we got rid of the tyrants in Venezuela. Now it looks like Iran. Maybe we can get rid of Cuba, liberate Cuba. I mean, this could be a freer and more prosperous world if this all pays off.
And that's what we're looking for. There's a dividend there, dividend of peace. Steve Moore, thanks for joining us. All good stuff today, and we appreciate it.